Welcome to your Property Monitor market report for the month of October 2021. This report's a special one. It marks 1 year since the market bottomed out. That's right, last year, November 2020 is when the market bottomed out and prices started to appreciate. We've now gone on through 12 consecutive months of price appreciation. Last month, Dubai property prices increased just under 1%, 0.95%. This is actually the slowest month-on-month price increase we've had since the market started to appreciate. Property prices now stand at 977 dirhams per square foot and are equivalent to the prices we saw back in May to June 2013. This now puts us 24.5% away from the trough of the previous market cycle and just under 21% from the peak. After recording a monthly increase of 2.5% in June earlier this year, property prices have been slowly starting to lose momentum. And over the last 5 months, have consistently been getting smaller and smaller and smaller. This is actually a good thing. This is what we want to see. This is what we've been talking about. We want to see the pace of appreciation start to slow down and be something that's sustainable in the long term. Otherwise, we're likely to see a short-lived market of, say, only a year to 2 years, where at a slower price appreciation, we can see this stretch out over the next 2, potentially even 3 years. So let's take a look at the recovery compared to the last recovery cycle. The first 12 months of the last recovery cycle, from October 2012 to 2013 in September, saw prices appreciate 18.13%. Contrast that to this current recovery period, from November 2020 to October 2021, prices have appreciated 18.3%. So pretty much mirroring that market. But as you can see from the chart, the pace of appreciation is showing there that it's starting to slow down. Contrast that to the previous recycle where there were some ups and downs and then a significant uptick in property prices. That's what we're hoping not to see. We're hoping to see small, sustained growth over the coming months. That could actually lead us to a property cycle where we pass previous price performance at the peak. Moving on to historic transaction volumes. Transactions in October, another impressive month. Just over 5,200 transactions, representing a 54% year-on-year increase and a 9% increase over 2019, and performing well above both the 10 and 14-year long-term averages. So while October was a strong month, how strong should have it been? How should it compare to previous months? We're actually down month-on-month from September, and September was down month-on-month from August. This is not something that we typically see. The typical seasonality in the Dubai market is we come back from the summer, we have a slow August, our slowest month of the year, and then September, October, November build on each other month-on-month on transaction volumes. That's not what's been happening here. There's a good chance that we've had all that extra activity from those record months earlier this year. They've already absorbed a lot of the sales that were going to happen in the market. One of the other things to consider is the amount of available inventory. With developers releasing less products over the previous months, and the large amount of townhouses and villas already been absorbed in the market, those that were priced well, those that were the value deals in the beginning, and now what's sitting on the market are those that really aren't in the market. They're priced too aggressively where you've got an extended gap between buyer and seller expectations and they're not moving. So there's not as many transactions happening in those categories. Transactions on an annual basis just surpassed 48,000 for the year. This is an incredibly strong year, one of the strongest we've had on record, and we're on pace now to probably close around 58,000 transactions for the year. Even with the slowdown in the seasonality trend, we're still on pace to probably hit about 58,000, and that's going to put us in between those record years of 2013 and 2014. Wait a minute, I just said the market's starting to slow down and we're seeing things that are unseasonable. Instead of seeing month-on-month transaction growth, we're seeing things decline. Yet I'm now forecasting another 10,000 transactions for the year. Where are these going to come from? Well, there's developers with significant off-plan launches coming. Damac with their newly launched master community, Damac Lagoons. The Santorini phases alone will account for over 900 units. And then Talal Al Gaf from Majid Al Futtaim, on the back of a recent 500 plus units there, have several new phases in the pipeline. El Isab and Arabian Ranches 3 by EMA, and then additional projects in the valley. We're probably going to see another 2,500 to 3,000 villa and townhouse units alone come on the market in the coming months. That's where this additional transaction is going to come from. Those villas and townhouses are what's in demand, and developers responded. We're going to see additional transaction activity there and close out the year strong. And then there's something of a first in Dubai. Nakheel is going to be redeveloping a community. Seasonality Village is the tenants have been given 12 months notice to vacate, and the entire project is going to be redeveloped. We're probably going to see another couple of hundred villas come on the market there. Moving on to registration type, that being either an off-plan transaction represented by an ACUD or a completed property represented by a title deed. For the month of October, there were just over 2,000 off-plan transactions, representing about 40% of the market. And completed title deeds, there were 3,146, representing 60% of the market. That's 60-40 split that we've seen over the last months. So in October, this 60-40 split for completed properties over off-plan transactions fits closely with the 2021 year-to-date average and the 12-month moving average, and well above the 2019 and 2020 year-to-date averages. So this 60-40 split in favor of completed properties hasn't always been the case. Previously, it was a 60-40 split in favor of off-plan. What's important to note here is that while completed properties now represent 60% of the transactions on a monthly basis, there are a significant amount of developer first-time sales that go into those. About 40% last month of those completed title deed transactions were actually developer initial sales for completed properties. This is up from 30% earlier this year. And it's probably going to be a trend we'll see continue as developers continually offload completed inventory that's on their books. We're also likely to see a reversion in this 60-40 split. With more off-plan properties coming on the market, those big launches I just mentioned coming, we're probably going to start to see this 60-40 split lessen. Is it going to go back to what it was before, 60% in the favor of off-plan? I don't think so. I think we're probably going to see a healthy balance, a new equilibrium around this 50-55% range, teetering back and forth each month. Moving on to sales recurrence, the sister statistic to registration type. Initial sales came in at 3,316 transactions, down about 9.5% month on month and representing a 63.5% market share, which is down roughly 1% month on month. Resale transactions came in just above 1,900 for the month, down 5.8% month on month on transaction volume, but taking a market share of 36.5%. This market share statistic is the part we really want to take a look at. Coming in at about 35%, it's well below the 2021 year-to-date average and the 2021 moving average of, say, roughly 40-45%. We're now trending back towards the previous marker of earlier years, around 33-34% that we saw in 2018, 2019, and subsequent years. This again is probably going to see something we revert back to. As more off-plan sales come in, it's going to be more initial sales in the market. So we're probably going to see, we've moved away from that high point earlier this year of, say, January, where we reached a record high of over 50%. Again, this can be attributed to the lack of palatable and affordable supply in the market, specifically in the villa and townhouse segments that drove the early stage of the recovery. And again, that gap between buyer and seller expectations and reaching that point of impasse on pricing. Taking a look at residential property trends and how they've fared long term, what you can see here is that both apartments and villas are trending downwards, whilst townhouses are trending upwards. So we're looking at a market as a whole here. What's important now, we need to break these down by initial developer sales, that new inventory that's coming into the market, and then the resales, the inventory that's already in the market and subsequently being resold. So looking at initial sales, you can see apartments had some ups and downs, but ultimately long-term trending upwards. The more recent trend though is massive growth in the townhouse segment. We're seeing many more townhouses come on the market, and a little bit of decline or some small growth here and there in the villa segment. So this is on the initial developer sales. So as developers turn their attention to single family homes, primarily townhouses, where's the transaction activity happening? Well, no surprise, big transaction activity with EMR throughout their projects, Arabian Ranches 3, the Valley, and even in Dubai South. Majid Al Futtaim with Tilal Al Ghaf in the various phases there, and then Dubai Holdings / Dubai Properties with Villanova. That's where we're seeing a lot of these townhouse transactions complete. Now turning our attention to the resale market. Well, villas and townhouses, you can see, really starting to slow down. Why is that? Well, it's because those that wanted or needed to sell, they have. And those that are on the market right now, they're on the market, they're not in the market. Effectively, they're pricing themselves out of the market because they can't meet buyer expectation with price. On the other hand, we're seeing apartments, a little bit of activity increase. This is happening in specific communities, those historically popular communities. So your Business Bay, Downtown, Dubai Marina, JLT, and also JVC. We're seeing transaction activity slowly increase there. Let's take a look at activity by price tiers in October. You can see there's some ups and downs in various categories, with the biggest movement being in the 3 to 5 million price point. Where's this come from? Well, last month, there was a lot of it was from Kaya and Arabian Ranches 3 and Harmony and Talal Al Gaf. Those properties that launched a couple of months ago, we're now starting to see those transactions follow through. This is where the growth has been in the 3 to 5 million segment last month. And actually, throughout most of the year, we've seen tremendous growth here. And my bet is we're going to see tremendous growth here going forward. So let's take a look at the same thing on a year-to-date basis. Where have things been moving? As we look month to month, there's a little more volatility. Let's take a look annual basis. So you can see the lower end of the market is where there's been less activity, less favorable. And then sort of that mid-range, sort of starting around 2 million and up, that's where we've seen the increased activity, with a very strong 3 to 5 million range. And then, as we've been talking about for previous months, the 10 million plus category, that's really been going crazy. So how did it do this month? So in October, not a record month, but still over 100 transactions in the 10 million plus price tier, representing about 2.8% market share. So we saw this market share peak at around 3.1% and 141 transactions in August. And since then, we've been seeing it slowing down each month. I forecast we're going to see a continued slowdown in this segment. Again, just because there's lack of available inventory. On a year-to-date basis, there's been 982 transactions in the 10 million plus price tier. There's about 150% over last year and 200 and almost 400% over 2018 and 2019. So now, still on price tiers, instead of looking at the 9 separate price tiers, we're just going to narrow them down to the main 3 right now. So that lower, that mid, and upper end of the market. The upper end starting at 3 million and up. This is where we've seen the biggest growth and the biggest activity, and this is where to look going forward. So in October, there were 832 transactions above 3 million dirhams, representing 22% of the market. This has been steadily increasing from May, when there was about 700 transactions, and just under 20%, and we've seen month-over-month increases going forward. Year to date, there's been 6,722 transactions, which is about 131% increase on last year, 95% on the year before, and 146% on 2018. So keep an eye on this price point, that 3 million plus price point. Probably around, actually, think about the million US dollar point. Right? That million US dollar point and up, where we're going to see a lot of villas and townhouses falling in that 3 to 5 million price range, a little bit up from there. That's where we're going to see a lot of activity going forward. That's where I want to keep your eye. Looking at rental yields, they're holding firm at 5.7%, the same as last month. Now we're looking at a year-to-date average and a moving average of just under 6%, whereas last year in 2020, this was at 6.5%, holding firm at that for most of the year. Now we're a half a point below that. So why is this? What's happening? Well, the pace of sales prices is increasing faster than the pace of rents. This is one of the reasons why we're seeing a decline in yields. Dubai's also maturing, so there's less risk, and with that comes lower yields. And what we're also seeing is a large amount of people buying their first property. So they've been renters, they've moved out, now there's a vacant property that has to be filled. So all those factors together are the reason why we're seeing contraction in rental yields. This is likely to continue in the coming months as more people buy their first homes and as more properties come onto the market. So while yields may be falling, still at 5.7% and even falling lower, let's say over the next 12 months they fall another 0.5%, we're still in the 5% range on gross yields, and net yields that will probably fall in the mid to high 4s. These are still very attractive numbers if you look on the global stage in the mature markets. In places like New York, London, Hong Kong, if you're looking at a 3% yield there, it's probably attractive. So Dubai will still be outperforming those other mature markets and an attractive investment destination. If we look at apartments, roughly 750 transactions for the month, down 22.5%, and villas at 504 transactions, down 13.7%. But then townhouses at 351 transactions, up a whopping 147%. Just doesn't sound right. How can townhouses be up and the other two be down? Well, there's a big part of this is actually the bulk transaction market, where a significant amount of mortgages came in last month for townhouses as a bulk registration, where a developer has potentially refinanced a number of units, or an investor who holds several units is taking out financing against them. So now let's focus on new origination mortgages. Coming in at about 37% market share, down about 5.5% month on month. What do those transactions look like? Well, the average LTV, the loan to value ratio, was 74.2%, down slightly from 75% last month, but hovering around that long-term average in the 74s. with an average loan size of 1.76 million, down about 170,000 month on month, and leading to a purchase price of just below 2.6 million, down about 210,000 month on month. So outside of the 37% that were new originations, there were bulk mortgages representing 28%, and then other mortgages representing 35%. What are other mortgages? Well, other mortgages are mortgages for properties that happened in a month other than the month that they were purchased. So they might be a refinance, a remortgage, an equity release, but something that's happened not in the month that it is purchased. Could be 1 month after, could be 10 years after. That's what we put into the other category. So where did all these mortgages happen? Well, number one last month was Dubai Investments Park, followed by Jumeirah Village Circle, Dubai Marina, International City, and then Emirates Living. Doesn't seem right. Dubai Investment Park leading the way with 9.7% in mortgages during October? The reason this has happened? Bulk mortgages. In Green Community West and DIP, there are 151 transactions, representing about 420 million in mortgage value. These bulk transactions in DIP actually represent 97% of the activity there. So without those, DIP would completely fall off this chart. The same is true for JVC. Whilst having a lot of mortgage transactions each month, Bloom Heights with 74 as a bulk transaction represents about 63% of those. So that again would fall considerably down this chart. And then International City, 93% of the transactions happen there, also bulk. So you'd see that really fall down the chart. This now moves up your key communities like Dubai Marina, Emirates Living, Dubai Hills, and others up further up that list. So whilst there's still significant activity happening in all those communities, it's important to note which are the bulk transactions and which are the transactions that are made up of the main market, the origination market, and the other segment. And that was the Property Monitor market report for the month of October 2021. If you like what you saw, be sure to click the buttons below and subscribe or like the video. And to find out more, check out our website, propertymonitor.com. Until next time.